mean, there is a fair bit of crowding in which happens too for Interglobe. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. You heard Sonia talk about Interglobe, so I just wanted your thoughts. Do you own it in your fund? What are your thoughts here?
Yeah, so it has been part of our portfolio for quite some time now. In fact, one of our top 10 holdings. Because we have seen, from 2400 levels. I think that was the level when we saw one of the promoter was exiting actually the stock. And before that, we had seen a lot of conversations happening between the promoters. So when that particular cloud started getting clear, I think that is where the stock started taking the different trajectory. So we accumulated around 2400 and still holding the stock. And I think looking at the traffic, the passenger traffic, which is continuously increasing. You have summer vacations also now, just forget about airlines. You can see the hotels also booked like anything. And that is where the number of people, and recently we saw Vistara also, they, stopped around 10% of the move because of the pilot's problem. So that also benefited Indigo in a way. And I think the kind of orders they have given for number of aircraft, this is also a record actually for those manufacturers ever in their life. And this is where I think the domestic story, the domestic tourism, you don't have many players in the listed market to play. If you look at hotels or you have airlines, you may have safaris or VIPs. So that is where in the liquid space, you have to play these stocks. And I think that is where this stock is garnering more strength now when at least the promoter side problem is off. And the last time when the promoter had exited around 3000, you saw that stock did not decline below those levels at all and just, was building up. It's a good sign of strength.
Okay, all right. Hi, Amit. Good afternoon. Good to see you win. What about the metal stocks? How are you placed out there? Your stocks like Moil that have moved up. Some of these backward integrated companies as well are doing well, like Infra. But, you had a brokerage note that came in today from Equirus. They are saying that SAIL has ran away ahead of itself. You had preference for miners. What is your fresh take on it?
So metals, actually what we like this time is, it is not a scenario where metal prices are going higher, earnings are catching up because of that, and then you get stuck up at the higher stock prices. Because when the metal prices are getting topped out, you don't know. This time the situation is not like this thanks to China. Because of that slowdown, still the prices are lower, but there is more volume expansion. In fact, the domestic steel companies are much better placed than the foreign companies. In fact, you would have heard about Biden. Actually, he was looking to put around 25% tax actually on the Chinese metal companies. If Trump comes, we never know, it can go further higher. So in that scenario, I think Indian companies, the metal along with mining, I think both are looking better because this volume expansion is happening. And you look at the efficiency also. For example, Jindal Steel and Power. So we have seen that the EBITDA per ton has reached almost 15,000 crores. It is one of the best actually in this particular space. Also, this company had 4.4 times debt to EBITDA before, and now it is reduced to 0.9 times. I think one of the best thing is your value-added segment where you garner more margins. It has increased to almost 65% sales of this particular company. And that is where I think going forward, the numbers can be better. And the stock is, I think gearing up for that. So you will find good companies in the metal space here where I think that growth opportunity is coming. And from the mining, I think NMDC, we have picked up, it had declined recently towards 200. And we feel the volume actually, which used to be 30 to 35 million ton before, in the last 1 or 2 years, it started coming closer to above 40 million ton. This year, actually financial year, it has closed around 45, 46. And in the coming 2 years, it is coming closer to 55 million ton. So we feel that this trajectory is going higher because there is more demand for steel. And from 175 million ton, that demand is going to 300 million ton going forward. So this is where the iron ore requirement from the current 382 million ton, I think it is going to have 450 million ton going forward. So much higher increase of volume, and that is where these segments are getting benefited right now.
Amit, is Kotak Mahindra Bank a part of your portfolio? Was it one of the preferred picks? Because there has been a fair amount of derating and bad news surrounding it. How would you approach Kotak Mahindra Bank?
No, because of valuations, actually, we were never into the stock even before. We in fact like some of the PSU banks which were part of our portfolio. And I think in the month of June, when possibly you will start seeing the money flow coming from the JP Morgan bond index into the Indian government bonds, our bond yields, which are already subdued, 7.2% vis-a-vis US bond yield, which already moved to 4.6%. I think you will see some cool off in the bond yields, and I think it is also possible some interest rate cut towards the last quarter of the calendar year can also be seen. In that case, I think some PSU banks can definitely do better, which have a higher chunk of government bonds with them. Treasury profits can come better. And I am seeing that the corporate lending book also has started growing, so which can also benefit. So eventually, I think this is a good space where you can be in. And yes, it has not participated that much in the last few months, but it is possible that it can pick up eventually as we move towards June or beyond.
You know, Amit, do you have a view on... actually, let me do one thing. This is Federal Bank I wanted to ask you about, but we actually spoke with Mr. Shyam Srinivasan. We reported earlier that Mr. KVS Mani and the joint MD of Kotak Bank, who actually stepped down, that he perhaps is going to be one of the names, who's one of the candidates for the top job at Federal Bank. So after the results today, we had the opportunity to put some of those questions to Mr. Srinivasan, whether he is actually one of the candidates. Take a quick listen, and then Amit, why don't you respond?
Earlier interactions, we've mentioned that the board has set up a search panel that's going through its process. I'm sure, be sure when the regulatory approvals come in, it will be first flashing on your screen. So beyond that, it's hard for me to even make any comment because the process is in an advanced stage, but underway. So beyond that, really no comments. It'd be inappropriate to make any statements. The regulatory process is underway. The search panel is doing its job and doing it very well. All I know is they have a rich slate of candidates. We did say that we have both internal and external candidates to choose from, and the process is underway. Honestly, beyond that, everything that is being talked about is absolutely in the speculation zone.
Okay, so both internal and external candidates are in the reckoning, and the panel is going about looking at the list of candidates and shortlisting them. Amit, so lots of drama, right? And this has caught everybody's attention. But what do you make of things? Because, Kotak in itself has run into a lot of rough weather. It's been a bad year for the stock. I mean, it's already down 17-18%, worst performer on the Nifty. Now, for a lot of people who are holding this stock, saying it's a blue chip bank, not much to worry in the portfolio, what would you say?
So I think very simply, we need to look at the core fundamentals and the current valuation which the market is giving you. So when you talked about Federal Bank, I think mid-cap private banking definitely has some juice left. And actually what's happening, the kind of provisions they had done before, they are doing the write back of the provisions because some resolution of the assets also is happening. It's benefiting actually some of the PSUs also and these mid-cap private banks also. So in the Federal Bank also we had seen it, and its NIMs also have got steady because if NPAs actually have declined, it actually betters the NIMs position also. But my point is we cannot have a very high weight here because going forward, you may see a scenario of interest rate cut also. In our interest rate cuts, generally we have seen that some of the NBFCs, they start performing better because their cost of funds gets reduced. And that is where we need to possibly shift some money at a certain stage going forward from these banks possibly into some of the NBFCs also, if we have to keep in the BFSI space our allocation intact.
So Amit, tell us which ones do you like? Because even over there, I mean, some of the biggest names have their own regulatory issues to deal with. We all know what's happening with Bajaj Finance going slow, right? But then on the other hand, look at Cholamandalam today. Stunning growth, good numbers. So within NBFCs, how are you, going about your selection?
And if
so as I said, valuations also we need to look at.
So, sorry, yeah, valuations. I'm just going to contextualize, to add to Surabhi's point. I mean, there's this Suresh Ganpati and Macquarie put out this note. Interesting, he says that the valuation gap between Chola and Bajaj Finance is actually very, very low now. It's the lowest it's been in its history.
Wow.
But he says return on assets, the gap between Chola and Bajaj Finance is very, very large still. I mean, I think Bajaj is about 4.5%, north of 4.5%, and this is about 2.5, 2.6. Yeah, I mean, you know, given that valuations have almost converged. So yeah, sorry to sort of jump in there, but go on, Amit.
Yeah, you are right. So we also we should not forget that Bajaj Finance still is under the pressure of the product ban that they had seen actually before. It is still not lifted. Some of the EMI cards and etc. So there are certain problems in certain segments because yes, regulatory regulations also are very tight. And it is right actually. I think we may come out winner only actually after all this. The transparency will come in. And I think if you look at from the NBFC space, I think some PSU NBFCs from which are catering to power, I think they are coming back. So they were not performing for the last, I think 2-3 months, but it looks like the results are very, very good and they can come up very fast because their loan growth is coming around 17-19%. And we have seen there also that whatever provisions they had done, some of the provisions actually are written back. PFC is still 1.7 times price to book, and it looks very attractive to us. It is still one of the top holding of our portfolio. And they had expanded their book actually. So 25% is catering to the renewables. Its subsidiary REC has got this rooftop solarization in the last interim budget. And I think that is where you will see more loan growth coming in. So almost 24-25 lakh crore of funding requirement is there actually, which these companies have to cater to. And this is where the growth is going to come. So if your NIMs are coming up, your NPAs have declined, and because of this, the provisions, whatever you had done before, we have seen some write-backs coming in. I think it's a good situation. The only thing is, whenever valuations become better, you need to, increase more positions in these kind of stocks.
Okay, all right. Got that, Amit. Good talking to you. Interesting conversation as always. Thanks very much. We will look forward to the next one. On that note, we will take a quick break, come back on the other side.